Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that there was some pretty strong buying early on, which eventually ended up failing off of the 29 resistance area. And at this point, the market has given back majority of the overnight gains. Now, heading into the open, we have to have a fairly nimble bias because it is a very balanced market as we head into the open. Now, the larger time frame continues to be bearish, and that continues to be pretty evident by all the rejections and the failures that we're seeing at the key resistance zones. But given that short term the buyers have been pretty strong, larger time frame still bearish, it makes for this very mixed context where you have to be fairly nimble with your intraday bias. So off the open, if the market can hold above 07 quarter to 09 quarter, then that would tell us that this short-term bullish market structure is still intact, and from there ES could go up towards the 19 quarter gap and test the 2075 to 2275 initial resistance, and that's still an area where sell side can be active. In the event of a breakthrough 2275, we can still test 28 to 31, which is still a spot where sell side can be active. Now, given that the market balanced in the overnight session and broke down from that 2075 to 2275 area, we may not get back up there. So that's something that we'll need to gauge in real time. And if we're seeing some unusual weakness, where let's say if the market opens above pre-market support, but the advanced decline line is fairly negative, then we could see a pullback towards 99 to 1902. That's a spot where buyers can defend on first test. But by then we just have to keep in mind that the entire overnight session buying would be wiped out. So if we have trapped buyers in the market at that point, then we could get further movement lower. And below 99, the next zone is 91 to 93, and finally 85 half to 87 half. So today, because of the mixed market conditions and because of the mixed bias on the multiple time frames, where the larger time frame continues to be bearish, the smaller one is neutral, slightly bullish. It just means that we have to be a little bit more nimble with our intraday bias and be open to a move up towards initial resistance. And if the market is fairly weak in real time and we don't really have any broad market strength, then we don't necessarily have to go back up to initial resistance. We could just fail over here and go down towards 99 to 1902, and then from there we'll have to see just the level of weakness or strength we are seeing in the market. And if we're seeing a lot of broad market weakness, then the market could go even lower because the larger time frame bias continues to be fairly bearish. So those are the main ideas heading into the open. Let's see if the sell side can regain control and that larger time frame bias can really press today, and we'll take it from there.